The August 2017 strategic case study pre-scene deals with the company AutoAuto, which is an electronics and design company that specializes in technology for cars. So we have a number of sections here outlined in the table of contents. We're going to walk you through each of these, highlighting the main issues that come out of these areas. And we're going to relate them to your P3, E3 and F3 studies, all of which will help to illuminate the points that are made throughout this pre-scene and will get you more ready for your exam. So you're a senior manager in the finance function at AutoAuto. You're told in this introductory section that you report directly to the board and you advise on special projects and strategic matters. You're expected to interact with and influence directors at the top level of the company. So you're dealing with CEOs, CFOs, and other directors on the board. And your focus is going to be on the long term. So you're dealing with the strategy that is going to guide the company over the course of 3 to 5 years and beyond. So with the management case study, you're looking at a mid-term focus, and the operational case study, you're looking at the short-term focus. And at those levels, you're more dealing with the implementation of strategies, whereas at this level, you're dealing with formulating the strategy itself. So you're expected to give lots of recommendations on where it is that the company is going. As I said, influencing the top people at your company is expected at this level, so you have to demonstrate a higher degree of skill in the areas of people skills and leadership skills. You'll remember they're 2 of the 4 skills examined at the case study level, and with earlier levels, the operation level in particular, technical skills were very, very important. They accounted for the majority of the marks being awarded. Whereas at the strategic level, there is an even split between business skills, technical skills, people skills, and leadership skills. And in particular, examiners will be on the lookout for your people and leadership skills, so the softer skills, influencing senior leaders, as I said, very, very important at this level. We know that the audience is comprised of board members. I've mentioned that already. And you'll also be expected as a senior manager to understand very fully the context in which the business operates. You're talking here about the market environment of the company. So you're talking about competitors and key players in the marketplace, suppliers as well. And you're also talking about the political sphere, having that strong political understanding and an understanding of and ability to take into consideration the wider community. So you're talking about stakeholders of many different stripes. So in the second part of this introductory section, we're told that AutoAuto is based in Upland, and we know absolutely nothing about Upland. We don't know if it's a developed country, a developing country, where it's based, we're not sure. We are told though that the currency of Upland is the $. So we immediately start to think about exchange rates and exchange rate risk, which is a key element of your F3 studies. If this is a company with imports and exports, we're going to be dealing with that particular risk. And you would ask the question then as to whether this is a company employing hedging strategies and whether that's something worth considering in mitigating that particular financial risk. And in the final part of this introductory section, we're told that AutoAuto prepares its financial statements in accordance with international financial reporting standards. And when we see the financial statements later on, there is nothing to suggest that they're violating any of these standards. They look to be pretty much in line with what we might expect from any other major company. We see later on as well that this is a company that is listed on its stock exchange, so there's a certain amount of rigor that comes along with that, and there's an expectation from the marketplace that financial statements are prepared well and give a true and fair reflection of the company's actual state. Thinking then about your objective studies for E3, P3 and F3 at this level, and really key points to keep in mind would relate to E3 and recommendation of strategic options. I've just mentioned before the need to influence the people you interact with at this level. Triggers will come in the form of emails from the CEO, the finance directors, etc. And you will be expected to recommend on strategic options. You might be presented with a number of possibilities. You'll be expected to explain why in particular you're recommending one option over the other. You'll also be expected to weigh up the pros and cons of each of those options you're presented with. With P3, it's all about risk, and you'll be undoubtedly asked on an exam day to weigh up risk of various kinds. And then with F3, it's a lot to do with considering different funding opportunities and possibilities and recommending an adequate financial strategy when it comes to different strategic options. In the second section then, we're looking at the company background for AutoAuto. And we're given a bit of detail here on what the company actually does. It's an electronics and design company which specializes in modern computer technology for cars and other vehicles. So we're dealing with probably quite complex operations. We're talking probably about a strong emphasis on research and development and intellectual property being important. And because you're dealing with car manufacturers, you're dealing with buyers with a lot of power. You think of Porter's 5 forces. Undoubtedly, you're going to be dealing with buyers that can really wield a lot of negotiating power and bargain and look for very favorable buying terms. So that's something to keep in mind at this early stage. AutoAuto then specializes in safety and navigation aids. So we're talking about sat-navs, which are satellite navigation systems, parking aids, and other devices that we receive more information on in a couple of pages' time when we look at the product portfolio of AutoAuto. In the second part then of this section, we're told about the business model, and it's all about disruptive technologies. In other words, that means groundbreaking products that change the industry. And we're talking about products, they create entirely new categories. And when you think of that kind of a strategy, you're dealing with high risk, but also potentially high reward. Risky because it's very difficult to estimate demand. When you're talking about a new product category, you're really fumbling around in the dark. You're not sure what the market response will be. And if you have invested significant sums of money in developing these products, then you may or may not get a return on that investment. You would also ask the question then, it's fine being a disruptive company, but what happens when the disruptor themselves become disrupted? And that, of course, is a looming threat for a company like AutoAuto. Maybe it was once very, very cutting edge, but there are new entrants and the concern about new companies coming on the scene that are more let's say, cutting edge, more highly skilled, they have more patents and intellectual property strength, and that is something that a company like AutoAuto always needs to be on the lookout for. And also something to keep in mind at this early stage is because we're talking about high tech, you're talking about creative and highly skilled employees, and with that kind of staffing come a number of challenges, because there's the need to manage those highly skilled staff. There's the need to retain them, because there's always the danger that a rival is going to come along and poach them. That's something you see in Silicon Valley in the United States, with tech companies fighting for the best talent and struggling to retain that talent. And then also very important with high-tech companies is the culture that's created around their employees. If it's the right one, then you have less to worry about. But if there's any clash in terms of very creative workforce and the overall culture, then you're probably going to run into trouble. So a very, very autocratic, top-down approach at a company like this, where you have very creative employees that are expected to be entrepreneurial, etc., it might not work so well. So that's something you need to be on the lookout for. And the other thing to keep in mind with highly skilled employees would be compensation levels. It's going to be costly to compensate these workers. Okay, then we're told about the sat-nav systems, satellite navigation systems. They are fitted with very advanced voice recognition technology, and they rely on high-speed wireless internet connections. So we all know about and have seen probably sat-nav systems in cars. They're kind of standard in more recent car models, but what we're seeing here is that AutoAuto is a step above that. They develop very highly advanced sat-nav systems, and the software they use is actually very, very flexible and very smart. It can accept instructions of all kinds from the driver. The driver says something like, "Sat-nav, I'm hungry," and what the system does is that it actually scours the internet for food locations and then comes up with a result with convenient parking, lots of choices, and the driver doesn't even have to look at the screen. So it's a very advanced sat-nav system. Streams of revenue then, and we're told that AutoAuto has 2 streams of revenue. And initially that sounds quite risky, but when we see that it's actually a company that's not just relying on sat-nav products, it's actually diversified to some extent and has a number of other products, then it seems maybe a little bit less risky. And the 2 streams of revenue come in the following 2 forms. AutoAuto either licenses its technology to vehicle manufacturers, or it sells its equipment whole to the car manufacturers, and in that way it's operating as an original equipment manufacturer. The short for that is OEM. So in the case that it licenses the technology to the manufacturer, it charges a royalty fee, which is usually per unit manufactured. And then in the case that it's actually selling the sat-nav system intact to the manufacturer, it would just charge an upfront fee. So the vehicle manufacturers, they're buying these products and they're installing them in their own vehicle. And another key point to make here is in the last line of that particular paragraph, they're not selling their systems to the aftermarket. So they're not selling directly to the public, they're not selling directly to garages, and that means they're passing up a source of income. And I think the reason for that is that they want to ensure the quality of their products is kept high, that there's no possibility that the end user, the consumer, or a garage is going to be tweaking its own system, and that there could be some fault or something like that. So they want to preserve that quality. They want to preserve a prestige brand image, and this is a reason for passing up that source of revenue. But when we do see the financial statements later on, and in particular when we look at the financial statements for one of its rivals that does sell to the end consumer, it seems that they're passing up quite a significant amount of revenue. We think then of real-life companies like TomTom and Garmin. They're discussed at more length in our industry analysis, and those companies are actually present in a number of other segments, and a notable one that AutoAuto is not present in is consumer electronics. I'm sure you've seen or know someone who owns a smartwatch or a running watch with TomTom technology or Garmin technology that uses GPS technology to locate a position and to measure out the distances covered. And that is a potential opportunity for a company like AutoAuto if it wants to diversify away from its reliance on these very powerful car manufacturers. We'll talk about that a little bit later on. We're told then in the next paragraph that AutoAuto does not actually have its own factories where it's producing its equipment, but instead the production's actually subcontracted it out to another party. We can assume then that AutoAuto is probably an asset-light company, but relies very heavily on its intangibles, and we'll see that when we look at the statement of financial position later on. Of course, because they're contracting the production out, you would assume that it would have to have very tight non-disclosure agreements to protect its intellectual property and to stop its trade secrets and patents being stolen and passed off and passed around to other manufacturers. So it's doing that on the one hand, and we're told that this avoids the need to share commercially sensitive information with customers, and again they're retaining a degree of control over build quality. So if they were again just passing off the responsibility for production to car manufacturers or something like that, then they would run the risk of the car manufacturers simply stealing their intellectual property, and they might also compromise the build quality of their systems, of their units. I'm sure that AutoAuto has a very tight relationship with its subcontractor and has probably built this relationship over the years, and this subcontractor is probably very used to the expectations that they have in terms of build quality, and they can rely upon them. In the final section then of this company background, we're told that the company was founded 15 years ago, so that is quite old actually in tech terms, but not old in standard company terms. And the founding partners, these three people, have a strong research background. They actually worked together in a research department in an electronics company, and we're told that AutoAuto was floated on the stock exchange in Upland 5 years ago. And the three founders, actually they sold a lot of their shares when they floated, so they got rich then, but they do retain quite a significant holding, and we see that the three of them there have a combined holding of 25%, so still very influential. A couple of things then to comment on that last paragraph. The fact that these people have strong research credentials, we're told later on. They have PhDs, many of them. So research and intellectual property are critical success factors for a company like this in the high-tech area. The fact that they're listed on the stock exchange comes with a number of pros and cons. The fact that they're a publicly listed company means that on the pro side, reputation is enhanced. They have access, of course, to wider forms of funding. They can tap equity funding as well as relying on debt funding. There's a degree of rigor that comes with being a stock exchange listed company. It signals to the market that this is a company with its house in order. We can trust the financial statements of this company, and we know probably that they have controls in place to ensure that the company is being well run. On the con side then of the equation, equity is more expensive than debt. That's because debt comes with the ability to write the interest expenses off before taxes. And there are more onerous regulations, financial statements need to be released every quarter, etc., that are expected by the market, as well as external pressures coming from shareholders that may not have existed when the company was private. And then when we're talking about the three key people at this company, Alan Yellowlees, Christina Marshall, and Abdullah Saeed, they have a 25% holding. That means that the agency problem, which you'll probably have met during your F3 studies, is not going to be such an issue at this company because the interests of the senior executives are likely to be very much aligned with the interests of the shareholders. Remember, the agency problem occurs when you have the agents of the company in the form of the executives acting in their own interest at the expense of the interest of the principals, and the principals would be the shareholders. So no such problem here, I would say. So we come next to AutoAuto's product range, and we'll see that there are 4 main products that they're currently offering. Just a quick word on life cycles of products in the tech industry, because you imagine that with technology, the life cycle is really going to be quite short. And certainly you would say that's the case with hardware, but where you have software coming into play, as you would with a number of these products, perhaps then the life cycle of a product can be extended continuously through constant software updates and iterations. And this is probably what's happening with a number of these products. So it's not that the smart nav system, the first product that we see here, would become obsolete very, very quickly. Rather, the shelf life of this product could be extended out as AutoAuto updates the software that works with this particular system. And what I would also say before we start to look at the details of each of the 4 products is that a number of these seem to be kind of industry standards at this stage. You know, navigation systems, parking aids, etc. They're becoming quite prominent even in mid-market cars. So for a company like AutoAuto, it's going to have to retain its edge by offering very advanced offers. Okay, so that is in fact what we see when we start looking at the smart nav here, which is its advanced sat-nav system. It's integrated with an internet connection, and it has a number of very nice features indeed. So let's have a look at it. It's connected to the vehicle's electronics on the vehicle production line. So you would say that this smart nav and how it functions is actually dependent as well on the quality of the car manufacturer's electronics too. If the car manufacturer is cutting corners, etc., then perhaps there are reputational risks to the smart nav system, even though it mightn't be AutoAuto's fault at all. If there's a failure down the line, it could actually be the car manufacturer that's failing to rig up the smart nav system correctly to its own electronics. So that's something to keep in mind. Smart nav, we're told, monitors several factors in addition to navigation. So this is where the high value of this particular system is coming in. It's not just a dumb sat-nav system, the likes of which has been on the market for a number of years now. No, in fact, it has a number of advanced features. So it can warn the driver, for example, of the need to refuel. But not only that, it could suggest the cheapest place to do so. And it can even recommend a short diversion to avoid paying high prices. And as well as that, it has very advanced voice recognition and interpretation capabilities. So very, very advanced software at the heart of this particular system. Very advanced, high end. You would ask the question then as to the cost of producing this system. You would imagine it's quite costly. And then you would also ask whether a high price is being charged. Is there a premium price being charged by AutoAuto to the car manufacturers for such advanced features? And we'll see a little bit more on that as we progress. Okay, let's move on then. So the next product we see is Truck Guard. And Truck Guard is a system that monitors blind spots around heavy goods vehicles. So we're talking about lorries, buses, and heavy transport like that. Drivers, they can't always see the cars and cyclists that are coming up, approaching the truck. And this means then that cyclists and pedestrians, they're very vulnerable and in danger of being crushed by one of these heavy vehicles because they're simply not seen. The first thing I would ask here is, if this is available for heavy goods vehicles, why not extend it to other vehicle categories such as cars? It seems like a very, very useful function, and we're told in the next part that there's an audio warning for road users, but in fact, if the danger is increasing and it becomes more likely that a cyclist or something is going to actually come into the path of the driver. There's a warning as well to the driver. So it seems very, very useful, and I think it's possible that this could be extended to other vehicle categories. Also, the fact that this is a company looking out for the safety of motorists and pedestrians means that it ties in with corporate social responsibility and ethics. Certainly, this is a company with the safety of the public at large in mind, and it is to be lauded for making products that make our world a safer place. The third product that it is currently producing is CruiseMaster. And CruiseMaster is a cruise control system, and with a cruise control system you have this kind of autopilot function that kicks in should you feel the need to have the car do a little bit more of the work for you. You take your foot off the accelerator and take your hands off the steering wheel, and it's particularly useful on long car journeys where you might be getting tired or something like that. So this signals certainly a move towards self-driving vehicles, which I'm sure you've heard all about. They're very prominent in the press currently, and it seems like it's inevitable that in the coming years we're going to have self-driving cars. And in fact, in the next section, we're going to see that AutoAuto is interested in breaking into that particular area. Okay, then with CruiseMaster, what it does is it permits the driver to drive at a constant speed without having to operate the accelerator or the brake. So that means greater comfort on longer journeys. And the way it works is that to disengage from manual driving, the driver simply touches the brake pedal. And CruiseMaster is linked with SmartNav or indeed with a competitor's SatNav. So this seems wise. AutoAuto is widening its potential market by allowing the CruiseMaster to be used with competitor SatNavs. And we're told that this particular system gives a very accurate average speed reading. We're told later on then that the microwave sensors in the front bumper of the car detect other vehicles on the road ahead, and CruiseMaster is using these sensors to detect objects that it is approaching, and it automatically slows down to match the traffic speed. So again, a very smart system, and it's constantly detecting potential hazards even when the system isn't switched on, and it can make an emergency stop if the car is in imminent danger of hitting a stationary object. Just one point to note here: it's actually recognized in the industry that it's very difficult to tell between a genuine hazard in the form of another car or a pedestrian and a harmless object, something like rubbish on the road, which you could perfectly drive over without any issue or danger. So that is actually a big challenge for these systems that the car industry is developing. And then the final product that is currently in development and in use, in fact, by AutoAuto is ParkSpace. And this is a parking aid for cars. Again, this is a feature you see in a number of recent car models. So it's becoming more commonplace. And what it does is it detects parking spaces that are large enough to accommodate your particular vehicle. And it can actually take over from the manual maneuvering of the vehicle into the space. And what it does is it directs the car into the space. The system itself does that. And it can also recognize hazards in the form of cars that are coming up or pedestrians that are in the way. And finally, then we're told that the park space can actually exit a tight space without hitting anything as well. So all very useful products and functionalities. I would say, though, that there is a danger that these are becoming quite commonplace. So it's important for AutoAuto to stay one step ahead or two steps ahead of the market. And the final part of the pre-scene I want to look at in this particular video relates to upcoming products. And this is where things get really exciting, because we're talking about driverless cars and we're talking about autonomous cars. And I'm going to distinguish between those two when we look at this section. Let's start with the driverless cars. Driverless cars are actually already on our roads, and there are a number of companies, most notably perhaps Tesla, that have made huge advances in this area. We're told here that AutoAuto has invested heavily in a project to develop a system to create safe and efficient technology for driverless vehicles. So the fact that they've invested heavily leads you to think of your F3 studies, financing decisions, and actually when we look at the financial statements, we're going to see that this is a company with a high level of gearing, which of course is introducing risk to the company. And also they are retaining quite a big percentage of their dividends. In fact, it's more pronounced for one of AutoAuto's rivals. We can see that from their financial statements too. And what that signals is highly indebted companies retaining lots of dividends. They're making or readying themselves for some big investments. And we're told here driverless technology is one of the areas that AutoAuto is betting heavily on. So big investments early on. Of course, they don't have the rewards to show for those big investments yet. So we're talking about big sunk costs at an early stage. There are question marks about whether they can actually recuperate those big investments. So that introduces risk. So we're told that AutoAuto is using existing technology and existing intellectual property that it already owns to create a fully functioning system that can then be sold to vehicle manufacturers for the price of only a few thousand $US per vehicle. And it's an ambitious target because several competitors are actually going to be selling their rival systems at a much higher price. A couple of things to comment on here. The fact that AutoAuto is using existing technology and existing intellectual property stands in their favor. It means that they're not buying in external IP, external patents, etc., which would be very, very costly. They're a smaller company. They're not a Google or an Apple that has the capability to just go out and acquire that intelligence. So it's good that they have that in-house. But the fact that they are looking to develop something so valuable but only recuperate a few thousand $US per vehicle while their competitors are actually going to be selling at a much higher price, I'm not sure that is a wise approach. Is it not better to sell on value rather than price? And will the price that they charge be enough to recover the undoubtedly heavy investments that they're making in this area? Those, I think, are key questions. Another key question is, can they actually go it alone? What you see in the real life industry is that in the area of driverless vehicles, you have a lot of partnerships between major technology firms and major car manufacturers, and they have significant financial clout, significant research capability, and they're coming together, partnering up in this area, and they're making big bets themselves. So a small company, or relatively speaking, like AutoAuto, going it alone, it's very, very ambitious, I would say. We're told that the immediate goal for AutoAuto is to develop a system that offers drivers the choice between controlling the vehicle themselves or switching to driverless mode. So when you're talking about driverless vehicles, it's a little bit misleading, the term, and we're told that in the final paragraph of this section, because you're talking about interaction. You're talking about interaction between a human driver and the vehicle itself, and you can jump between the two. So it's not fully autonomous. That relates to autonomous vehicles, which is the next part that we'll see. The way that the driver can override the automatic system is simply by taking hold of the steering wheel and touching the accelerator or the brake. So very simple. And when the automatic system kicks in, what it means is that the driver can safely make a telephone call, they can relax on the motorway and enjoy a long journey. So safety again, a key consideration here. This technology has the potential to greatly reduce the number of accidents on our roads. You think of the number of accidents caused through carelessness, through use of a mobile phone while driving, or simply being too tired to pay adequate attention to the road. They account for a huge number of accidents, and this technology has the potential to alleviate that significant burden and to alleviate a great amount of human tragedy. And interesting here that we're told there is an advertising campaign already being developed by the marketing department in AutoAuto that compares driverless mode to the automatic pilot mode in an airplane. And I would question why that's being done. Why is it happening so soon when the company seems to be quite a bit of a way off actually launching this feature? And secondly, is there a need for the campaign in the first place? Because AutoAuto's customers are not the end consumer, they're car manufacturers. Do car manufacturers really need to be sold on the idea of driverless vehicles when so many of them are already investigating this particular area? I don't think they need to be, not in the same way that the end consumer needs to be. So I don't know if it's a redundant advertising campaign. Even if it's not, there are costs being sunk into an advertising campaign very, very early on, and I would question the wisdom of that. As I already said, Tesla is very far along the way with driverless vehicles. They already have in a number of their models a strong autopilot feature, which gets a lot of publicity whenever there are a couple of accidents, and there have been a couple of accidents, but largely the autopilot feature in Tesla's vehicles has reduced the number of crashes for their cars. Okay, the second area is autonomous vehicles, and they're slightly different to driverless vehicles in that they're further along the road, so to speak, and this is a longer term aim. And what autonomous vehicles have that driverless vehicles don't have is they have no need for a driver. There's no requirement. So fully autonomous. They can transport goods and people without the need for a human driver at all. And the ability to do this would require software that is altogether more capable and adaptable. So when it comes to rerouting automatically when a road is closed or there's some inconvenience like that just comes up all of a sudden, currently the capability doesn't exist to do that. You think of your E3 studies, you think of the SAF model, suitability, acceptability, feasibility, and you would have to say with autonomous vehicles, really they're not yet feasible. And there are two barriers, principally technical barriers, which is what we've just talked about here. The software isn't advanced enough yet to ensure that these autonomous vehicles are flexible enough to adapt to situations as they pop up. But also, you would have to say there are legal barriers in space. There are, in the United States, for example, quite relaxed barriers. There's the ability to test these vehicles on some roads in the United States. When you look at the EU, it's altogether more restrictive in terms of what kind of testing can be done. But for sure, at the moment, what's happening is as this technology is being developed, regulations are responding to the technological advancements. They're always one step behind. And at the moment, there is not the legislation in place to ensure that the autonomous vehicles can just take to our roads tomorrow if the technology were to exist. Also, the fact that we're talking about fully autonomous vehicles here means that there is a potential political and social backlash when it comes to automation. Driver-related jobs are still a huge employer across many parts of the world, and there is a significant challenge presented with the introduction of autonomous vehicles. A lot of those jobs are going to be lost. A lot of people are going to be out of work, and you foresee a lot of tension, social tension, coming to the fore in the coming years. And in the final paragraph then, what we're told is that making a vehicle autonomous is far more demanding than making it driverless. So it's an altogether more advanced step, and it's more of a long-term aim for AutoAuto and the companies that are working in this space. The systems have to be far more robust in order to cope with issues that arise on the road. Just one more point before we close off this video. I would refer you to your E3 studies to revise planned and emergent strategies. It seems that AutoAuto is planning out its future here. They have a planned strategy in place. But when it comes to disruptive technologies and new product categories, I would ask whether emergent strategies are more suitable. With emergent strategies, you're borrowing from both planned strategies, but you're also responding in a very flexible way and jumping at new opportunities as they come up, and responding to competitor moves very, very quickly. So that would seem like a more logical approach with this kind of technology. It's difficult to plan for a disruptive future when you're talking about entirely new product categories. Sometimes they're impossible to even imagine beforehand. So with such an uncertain future, I would say it's impossible to plan it out in a very, very clear step-by-step way.